Micron Technology, an industry leader in memory and storage solutions, reported their third quarter 2023 earnings June 28. Revenue was down 56% year-over-year to $3.75 billion. Looking at the segment revenue, we can see all four business lines contracted sharply. Computer and networking, the largest segment at $1.4 billion, was down 64%. Embedded products at $912 million were down 36%. Their mobile business at $819 million contracted 58%. The storage business at $627 million saw revenue down 53%. Needless to say that operating margins, EBT and net income all came in negative, with the company earning a loss of $1.9 billion, down 56%. The company has been negatively impacted by the Cyberspace Administration of China due to Micron's products found in critical information infrastructure. They also cite that industry has passed a bottom for revenue growth. The company also announced a new high-bandwidth memory product to service the AI market. This puts the company's enterprise value at just over $78 billion. Earnings per share were negative 1.73, down from a positive $2.34 from the year-ago period, down 174%. Sales per share contracted to 3.4 times, down 55%. Cash per share, at $8.50, was slightly lower. Book value per share at 41.5 was also slightly lower. It should be noted that there are 27 million less shares reported year-over-year, helping these per share ratios positively. PE was negative, so this data is and PE growth are not meaningful. Micron isn't carrying too much debt, with a debt ratio of just 0.2 and a debt-to-equity ratio of 0.29. These ratios were weakened by the fact that the company issued $1.5 billion of long-term debt, where $600 million of the proceeds were used to pay down debt coming due in October 2024. Interest coverage is negative because EBIT was. Liquidity ratios show that Micron is readily able to pay off any short-term obligations. The current ratio at 4.26 and the quick ratio at 2.5 are favorable numbers. The cash ratio at 1.8 times further demonstrates the company has no liquidity issues. Return on assets and return on equity are both negative, as we can expect. Again, they are down a large percentage, as the year-over-year produced a net income of $2 billion against this year's negative $1.9 billion. The equity multiplier is 1.45. Micron has over $8 billion in free cash flow, up 6% year-over-year. Operating activity cash flow was down 88% to $1.3 billion. Investing activity saw outflows of $5.4 billion. Financing activity was $5 billion, up 338%. This was due to the issuing of new debt previously mentioned. The company still pays a dividend of 11.5 cents, yielding 0.68%, which is a good sign of Micron's continued viability.